Let's see if you can guess who said it about the cause of the Great Depression. Are you ready? Quote, "We did it, we're sorry, but thanks to you, we'll never do it again," close quote. Those words were spoken by current Fed Chairman Ben Bernanke. He was admitting to Milton Friedman at Friedman's 90th birthday party that the Fed was to blame for the Great Depression. The only problem is that he was saying the Fed didn't print enough money to get us out of the Depression. Sound familiar? With us now to take on Ben Bernanke's conclusions is historian and resident scholar of economics at the Mises Institute, Tom Woods. Tom, thanks for joining us on Freedom Watch. Can we believe anything Ben Bernanke says? He said on 60 Minutes 2 weeks ago that adding $600 billion to the monetary supply, the money supply, would not cause inflation. And then that famous comment that I just quoted at Friedman's birthday, oh, the real reason there was a depression is because we didn't print enough money.
Well, thankfully, Judge, we live at a time, thanks to the liberating force of YouTube, that average Americans can produce videos called, Bernanke was wrong, and just stitch together all the clips in which he has been utterly clueless about every major macroeconomic phenomenon since he took office as the Fed chairman. I mean, he said that the subprime problem wasn't going to spill over into the rest of the economy. There wasn't a housing bubble. He said that lending standards were perfectly robust, nothing wrong with them. Everything will be over by the end of 2008, and so on and on. So at this point, I don't know who other than Pravda, by which I mean 60 Minutes, is still listening to this guy. It's unbelievable. We have to be subjected to these Pravda-like interviews where they're just waving incense before him and bowing down and asking him these softball questions. I'd like you to interview him, Judge.
Well,
Wouldn't that be some fun?
I wish he would come on the show.
Happen,
if he comes on the show, I'll have you with me, Tom. Isn't it interesting that in the debates in Philadelphia in 1787, Alexander Hamilton was not able to get a central bank into the Constitution, that it took them 150 years to create this unconstitutional monster?
Well, it's interesting that they tried to do various things short of that by introducing a national bank of various kinds over the course of American history. And what we always read is that Hamilton was the genius and Jefferson was the country bumpkin who just didn't understand banks or the economy. To the contrary, Jefferson understood economics much better than Hamilton did. He wrote the introduction to the great Deschutes de Tracy's book on sound money. He believed in gold and silver as money. And in fact, that first national bank that we got in 1791, what you don't read in your textbook that's praising and expressing hosannas for Hamilton is that we got the Panic of 1792, we got 72% inflation after the first 5 years of that national bank. All we hear is that opponents of national banking don't understand the economy. To the contrary, it is because they do understand a free market that they understand that banking doesn't need any monopoly institution like this, any central planning institution like this, any more than the shellfish industry or the hat industry.
Should we be rejoicing that Ron Paul is now in a position where he might actually have some oversight over the Fed, or is his power as the chair of that subcommittee going to be diluted by the big government people who love the Fed from both parties in the House of Representatives?
Well, it's a win-win regardless. If Ron Paul is able to get us some good information about what's going on at the Fed, wonderful. That's about time the public found out about it. But if he doesn't, that's also good because it exposes the corruption of both parties, that they both there's nothing that'll make Democrats and Republicans kiss and make up faster than attacking the Federal Reserve. That's their bread and butter. That's the institution that allows them to get away with the spending without taxing and without borrowing, but to siphon off resources from society in a less conspicuous way. And there's a reason that Ludwig von Mises, the great Austrian economist, said, in the fight against arbitrary power, we often point to written constitutions and bills of rights, but he said we got to put sound money right up there with those things because it's sound money that keeps governments limited even more than these parchment guarantees.
Tom Woods, it's a pleasure. Thanks for joining us.